Foreclosures? Did someone say foreclosures? This is Danny Gould with the Selling Silicon Valley Group. Welcome everyone to another Silicon Valley market snapshot for the fourth week here in June of 2020. We are officially halfway through the year, everyone, and oh my God, what a wild ride it's been for these first 6 months, right? At the beginning of 2020, could we have even imagined a tenth of what's of what's happened over the last 6 months? I mean, it's absolutely insane. And before we get into the data, before we get into the numbers, just want to remind all of you that if you're a home buyer in today's market, you can go ahead and get the same data that we're sharing today, but for the neighborhood that you're specifically looking in, go ahead and text the word data plus the zip code or the neighborhood that you're looking into the number down below, and we'll get you a unique data set for the area that you're looking in. And if you're a home seller, go ahead and text the word data plus your property address, and we will get you a very comprehensive, even the Rolls Royce of data sets for your particular property in due time, in a very short amount of time. I don't know where I was going there. Let's just get into the data, okay, everyone? That's what I do best, okay? So let's start off by actually discussing the CNBC article, which is it's very interesting. It's a little misleading. The headline is not misleading, but then some of the body is it just, it's like 1 plus 3 equals, 1 plus 1 does not equal 3 kind of thing, right? Where they're saying one thing, but then they conclude with another. You'll see what I'm saying. So, title of this article, Housing Market Should Cool Off Later in Year, Moody's economist Zandy says. Now, housing sector has been one of the most resilient areas of the economy during coronavirus. Fact. Zandy says he expects the growth to moderate later in this year. Very reasonable prediction, I would say. And if you've been watching these videos for any period of time, I'd say 3 to 6 months from now, we don't know. But what we do know is that right now, the market is on fuego. Sales of new homes last month, new construction, rose nearly 13% year over year. Crazy, right? The confluence of high unemployment and the end of forbearance measures means that we'll get more defaults and ultimately more foreclosure sales, and that'll put some weakness into the housing market, according to this Zandy guy. Now, I always love when these economists come on, they talk about foreclosures, and we have to understand that this is a national headline, this is a national article. The market would have to drop so hard for even a small fraction of homeowners here in Silicon Valley to actually have to get foreclosed on. The vast majority of homeowners here, if you think about it, have built up a significant amount of equity. And if they do go into default and they're not able to pay their mortgage, they're not going to get foreclosed on. They're going to sell their home and they're going to walk away with money. Unless, and this is a big unless, they have used their home as a piggy bank for the last 5, 10, 15 years. It's very sad. It happens a lot, especially to keep up here in Silicon Valley. There are a lot of homeowners that have done that. They have refied, they've taken HELOCs out, etc., and they are now in a position where they no longer have any equity. Well, if that's the case and they are in forbearance and the market dips a little bit and this and that, yes, there could be some foreclosures, but what you have to understand is that is not going to be the norm. That's why I hate these articles, because buyers read this and they're like, oh my God, the market's going to be on sale. And it's like, no, the market's not going to be on sale. You're literally, he said cooling off, everyone. Now, they go on to clarify what they mean here. It says, Zandy stressed that he does not expect a sharp downturn for the sector, saying the housing market has navigated the pandemic remarkably well, and there are some very solid underpinnings. It's just going to cool off a little bit this year, a bit later this year. The market's going to be on sale. No, just kidding. It's just going to cool off a little bit. And that's why I love articles like this, because they cater to all, they pander to everyone, right? They pander to the fear mongers, and then they pander to the rational people and everyone in between. So it's like, okay, well, what is it? Is the market doomed, or is it not doomed? Let's talk about why it's not going to be doomed. I mean, the worst has already passed. Assuming that coronavirus 2.0 doesn't happen, let's just assume that the worst in terms of SIP and businesses being shut down, etc., the worst has passed, right? So the market, the economy will begin its resurgence, right? Now, once the government stops, cutting everyone paychecks that in some cases are bigger than the ones they're currently making, and once businesses run out of their PPP loans, and once they run out of their EIDL loans, and once, the loans come due, etc., will we experience some more economic fallout as a result of the free handouts that we've been given over the last 3 to 6 months? I expect that there will be some issues there, but will those issues supersede or negate the fast rising housing prices right now? I think the answer is no. And let me explain. If you look at the data here, and we've talked about this. We've talked about this in previous videos, but we've talked about this idea that coronavirus has either temporarily or permanently changed people's desires, where they want to live, etc. And so we've seen, and I showed you in last week's video, where in San Mateo, Santa Clara, and San Benito County, all three counties were experiencing higher than normal activity levels and lower than normal inventory levels, hence upward pressure on prices. And that delta, that gap widens the further south we go, meaning that the further away from the Mid-Peninsula we get, the more demand there is and the less supply there is in comparison to last year. So the gap is widening, and it's widening, and it's widening even further. Let's look at the data. San Mateo County, inventory down month to date, 4.1% year over year. Pending sales up 15.2% year over year. That's a pretty big delta. It's a 20% spread. Now, 20-point spread. Now, go to Santa Clara County, where the inventory levels are down 33%, okay? And the pending sales are up 13%, right? So that is a 50, close to a 50, 47 point spread. Gap widens even further. Now, let's look at San Benito County. Month to date, negative 40%, or inventory is down 40% year over year. Pending sales up 79% year over year. That is a 110-point spread. Can anyone say fire? I mean, that is the epitome of fire, and fire in the sense that when you compare it to last year, the market is in a completely different state than it was in June of last year in all three counties. And so with that much pressure on home prices, we are seeing in most areas and in most neighborhoods multiple offer situations where prices are getting bid up, and homes are selling for $20,000 to $50,000 to $100,000 over the last comparable sale. That is insane. And how long will this market last? Who knows? The notion is that June and July are replacing April and May, right? Or like mid-March through mid-May. And those are really the peak months, right? The peak 8 weeks. And basically we started seeing this at the end of May, early June. So June, July, we can expect that to ride out. Typically in Silicon Valley, what we see is a summer slowdown where the buyer activity actually softens a little bit during the summer. Why? Everyone's out on vacation. Everyone's going to 4th of July. They have weddings. They have vacation. They have the kids are out of school, so they got to take them to swim practice. And they're just not thinking of swim practice and whatever, tennis, anything else. They're taking them to summer school. They're just not thinking about buying the house. They put the home search on pause. And I know this is counterintuitive to most people's knowledge or understanding of the market, but this is fact. This is reality. And this is, if you're a home seller, you should know this. But this year, that's not the case. Why? Everyone's sheltered in place. No one's going to vacation. Guess what? If you go to Maui, you're quarantined for 2 weeks. So there's no way anyone's going on vacation right now. At least no one's attention, let's put it that way, is being pulled from their home search. And so we're seeing a huge resurgence in buyer activity. Interest rates have never been lower. Everyone's going out there and they're looking for their dream home. And guess what? There are no homes on the market right now. And so that is putting an insane upward pressure on prices. The buyers that get in before the end of June, those are the buyers that win, because July is going to be an even crazier month. We'll see what happens in August, September, October, November, December, but there will be mass appreciation that occurs over the next, I would say 4 to 6 weeks or so after this video is published, which is June 24th. So after June 24th, another 4 to 6 weeks of massive appreciation, massive growth here, and all that growth, will that be negated in Q4, Q3, Q4 of 2020? Based on what I just don't see any sort of, unless barring coronavirus 2.0, anything really negating the equity that will be built over the next, that has been built over the last 4 weeks and will be built over the next 4 to 6 to maybe 8 weeks or so. So if you're a home buyer, the time is now, because you're getting in. I wouldn't say it's the precipice right now. We're already a few weeks into this appreciating market. Right to win, because if you don't win, you're going to be paying more the next time you write. Does that make sense? If you're a buyer in today's market, if you do not write to win the first time, you will pay more than you would have paid when you wrote the first time. Make sense? Now, if you're a home seller, this is the time. June, July, maybe early parts of August. This is the time to act. There are so many factors right now in your favor. There's no competition. Everyone's out buying. Interest rates are low. Bottom line is, if you're thinking about selling your home, if your plan was to sell your home in 2020, the next 6 weeks, I don't know how much clearer I can get. It's not going to get better than that. Okay. And I don't want anyone to I know I'm going to get some haters on this video that say, Danny, you're talking out of both sides of your mouth. You're saying buyers should buy and sellers should sell. Which one is it? The truth is that right now, everyone wins. The sellers are going to win because they're capturing a great market. The buyers are going to win because they get a great interest rate. And guess what? If you watched last week's video, you'll know that at this week's interest rates, if you were to buy a home for $1 million, the market would have to depreciate 10 whole percentage points. That's right, 10 whole percentage points for you to make up for an additional point increase in interest rate, right? So if the interest rates were to revert back to where they were at this time last year, the market would have to drop 10% in order for you to be paying the same amount of money. That's insane. That right there should tell you you're getting a great deal. You are going to be paying less money than you would have if you had the interest rates from last year. Got it? The market's not going to dip 10%. I don't care. I'm saying it right now. I just do not see that happening in many parts of the area, many parts of the county. In fact, I would say in most parts of Santa Clara, San Mateo, and San Benito County, if you're buying right now, you're buying at a safe time, barring coronavirus 2.0. Barring coronavirus 2.0, I can't predict that, but I'd say up until election time, we're going to be golden here. So that's all I have for all of you today, folks. If you have any questions, or if you're a home buyer or home seller in today's market and you have questions about anything that you're doing right now and you want a more in-depth analysis, go ahead and text the word analysis to the number down below and we will get you a unique analysis for your unique situation. This is Danny Gould, everyone, with the Selling Silicon Valley Group, and I will catch all of you in the next video.